Welcome. Corporate sustainability has totally rocketed from a nice-to-have to an absolute must-have. But the real question is, how do you turn those good intentions into hard investor-grade data? Well, in this explainer, we're cracking open the playbook for all you corporate pros on the front lines of this massive shift.
Okay, let's just jump right into the single most important question you should be asking yourself right now. Is your sustainability data truly investor-grade? We've moved way past the feel-good mission statements. We're in a whole new era where investors, lenders, and creditors, they're demanding cold, hard, decision-useful numbers to value your company.
The market has definitely grown up. Just dropping in a few ESG buzzwords isn't going to cut it anymore. The demand now is for reliable, comparable info that draws a really clear line between what you're doing on sustainability and your actual financial performance.
And this right here, this highlights a huge paradox. We are absolutely drowning in sustainability data, but at the same time, we are starving for information that's actually comparable and reliable. And this is exactly where global standards like the IFRS, that's the International Financial Reporting Standards, are stepping in to bring some much-needed clarity to the chaos and really to create a common language for everyone.
So how do you meet this new standard? Well, it all starts by assembling your disclosure dream team. This is not just a job for the sustainability department anymore. Nope. It is a cross-functional mission that needs real buy-in from literally the entire organization.
Look, your CEO and CFO, they set the tone from the top. But the real game changer here is the massive shift happening in finance and accounting. They're now being asked to bring the exact same level of discipline and rigor to sustainability data that they bring to the balance sheet. Think about that. That is a huge evolution. Meanwhile, you've got investor relations crafting the story, HR providing that critical people data, and IT building the digital backbone to make it all auditable and reliable.
All right, team's in place. Now we get to what is maybe the most critical internal step, making sure your data is rock solid. This is where the real work happens, building a foundation that can stand up to the toughest scrutiny.
This slide, this really gets to the heart of it all. You would never, ever dream of reporting your revenue without airtight internal controls, right? Of course not. Well, that exact same standard now applies to your sustainability data. It's time to treat your emissions numbers, your water usage, your employee turnover metrics with the very same discipline as your financials.
And the process is systematic. It's not a scramble. First, you figure out exactly what data you need based on what's material to your investors. Second, and this is so key, you implement the internal controls that guarantee that data is accurate and complete. And third, you make sure the board is providing oversight, which signals to everyone how strategically important this whole process is.
You know, these controls aren't some abstract idea. We're talking about real, tangible actions. Things like actually calibrating your electricity meters, setting up software to automatically flag weird data points, and having independent reviews. These are the nuts and bolts processes that build confidence, prevent those costly restatements, and make your data truly auditable. It's the same trusted system we've used for financial accounting for decades.
Okay, so you've got a team, you've got quality data. Now for the million-dollar question. What do you actually report? You can't report everything. That's just not feasible. This is where the single most important filter in all of sustainability disclosure comes into play: materiality.
So this is the official IFRS definition, and you'll notice it is laser-focused on investors. What does that actually mean in plain English? It's simple. If a piece of information, whether it's about climate risk or your supply chain, could make an investor think twice about putting money into your company, well then it's material, period.
Now, let's quickly break down the two main views on materiality, because getting this right is absolutely crucial. Financial materiality is basically a one-way street. It's all about how the world and sustainability issues impact your company's bottom line. Double materiality, on the other hand, is a two-way street. It looks at how the world impacts your company and how your company's operations impact the world. Both are super important, but they answer very different questions for very different audiences.
And here it is, the practical playbook answer to the preparer's biggest question: where does all this data go? It's actually pretty simple. If it's financially material, meaning it could realistically impact your company's value, it belongs in your regulated filings, right there alongside your financials and the M&A, the management's discussion and analysis. But if it's about your broader societal impact, that's the double materiality stuff. That's a perfect fit for a comprehensive, standalone sustainability report. So let's connect all these dots, shall we?
A really great internal process, one that's built on solid data and a crystal clear understanding of materiality, well, that's what transforms this whole thing from a reporting chore into a powerful tool for communication and strategy.
And this chart just illustrates it perfectly, the direct link between sustainability and financial performance. This is not abstract stuff. For a car company, product safety isn't just an ethics thing, it's a huge revenue driver. For a tech company, its environmental footprint isn't just a green issue, it's a direct cost. This is about running a good business.
When you get down to it, getting this right elevates the entire function. The goal isn't just to check a box for compliance. It is to create powerful communication that actually sharpens your strategy, gives you a much better handle on risk, and, frankly, makes your company way more attractive to the capital markets.
So, I'll leave you with this final thought. As you're building out your sustainability reporting process, just ask yourself this one question. Are you just building a compliance machine? Or are you building a genuine, durable, competitive advantage? Because the answer to that question is going to define your success for years to come.